The three things that you saw, Gene, either positive or negative, that we should or viewers should take away from the report and the call.
Positive is that the revenue growth continues to be impressive. Call it 14% for e-commerce. They're gaining massive share. I think investors who have traditionally owned the stock can be comfortable that this will continue to be disruptive based on the current trajectory of the business. I think the negatives outweigh the positives in this case. Deirdre did a good job pointing out what I would consider the pressure point on the quarter, which was that lowered guidance. I looked at some analyst changes to numbers today, and they had lowered their numbers for 2019 by 20%, earnings numbers. Revenue came down just slightly. The India piece is really a non-event. It's 2% of revenue. It'll probably go to 1%. That does explain, by the way, the lowered revenue guidance. But I want to return to the earnings piece to it. As I have been reflecting on this guidance, I went back and looked over the last 7 years. There's been 3 times where there's been greater than 10% earnings cuts to analyst expectations. And I reluctantly look at my model from 2013, where I thought that we'd be approaching a 10% operating margin at this point. We're at about a quarter of that right now. The reality is this, is the real question around Amazon isn't whether they should invest or not invest. That's their business model. The real question is, how should investors value this company? Because indefinitely there's going to be a rise in margins in the next few years, and then we're going to go back into a spend cycle. And so I guess one maybe more critical way would be put is, how do you value profitless prosperity?
That's a good question.
Pardon?
And what's the answer? Is it overvalued, you're saying?
It's the answer is, if you take a 5-10-year approach, I think you can sit tight. I think if you take more of a judicious kind of 2 to 3 year approach, it's overvalued. And let me just kind of put this. I'm sorry.
Go ahead.
The scoreboard's broke. And specifically when Amazon, again, trades about a 6 times greater multiple than something like Apple. Now, this isn't some creative way to talk about the values of Apple, but I think that is a kind of, if you think about profit, that question, there's no doubt that Apple is the world's greatest company when it comes, tech company when it comes to generating profit. And so when you talk about this idea of lack of profit, I think a comparison between the two companies is fair.
Alexis, let's talk a little bit about this. As somebody who's a founder, as somebody who wants a long runway, wants to be given that, is it valid for the street to start saying exactly what Gene just said, a profitless prosperity?
Yeah, you know, this is why the public markets fascinate me. I think the position that Amazon is in and that he alluded to is very much playing for the long term. And when I look at the foothold they have with hosting, when I look at the fact that they've only begun to scratch the surface on things like advertising, I mean, I just recently received a random little sample of free product with an Amazon purchase. It was marketing, and it was paid for by a CPG company that because of all of Amazon's data, they knew I would like.
I saw you post a picture of
yes.
this. What was it?
It was some Amazon brand Nutella. Well, it wasn't Nutella, but it was their version of it. And so we're starting, and we've seen reports of now Amazon testing versions of this, and it's clear that there is a wide range of businesses that when you have that much data and that much insight into everything from web traffic to consumer purchasing that you can still layer upon. And Amazon is so smart about investing for the long term that, I mean, even as I sit here as a proud early investor in Instacart, I think and I remember coming on here saying the Amazon acquisition of Whole Foods was a great boon because it was going to galvanize every other grocer to get on board with Instacart. I think the same thing with them moving into creating, I think, a few thousand Amazon Go stores in the next few years. We're going to see a cashierless shopping experience spread very quickly here in the States. Because it's better, it's cheaper, it's faster, it's all the things consumers want. And this is long-term investment, but Amazon consistently is right in making these things, and I really don't see this as being.
But it does command a very premium valuation.
No doubt. And that's why I stick primarily to the private markets, and when I am doing public market investing, it is very much long-term. It is buy and forget.
Gene, how long has Amazon been called profitless prosperity? 15 years?
Yeah, probably. And the stock's gone up a ton.
18, yeah.
I've seen it. Anybody that was a non-believer has been, drawn and quartered. I mean, I wouldn't bet against Bezos
No.
At least in this, maybe some other areas of his life, but not for this. I mean, so this is another time where you're investing, and then all of a sudden, 5 years from now, you go, God, that was genius. Maybe not. I don't know. Right?
Just to be clear, I think that they are going to be massively disruptive. Joe, you were talking earlier about the retail opportunity. I think that is something that we're going to hear a lot more. I incorrectly predicted in 2017 that they would buy Target. I still believe that combination makes sense, and I think that the idea about them taking more in retail. So this is a great business model long term, and I think of long term as kind of 5+ years. But over the next year, I think they're so just for the people who are trading for a year, I think you move on. I think for a long-term investor, this is a great one to own.